Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Wednesday, May 9th. Always keep in mind there is a risk of loss when trading commodity futures and options. Well, with the big price rally today we've seen in the energy market, I thought it'd be worthwhile looking at some fundamental views. And I know the headlines that were grabbed here recently was the sanctions going against Iran again, and some of the geopolitical events that are taking place here. But I do believe the fundamental picture was set up prior to this announcement, and as we've seen the last several months, prices have been rallying, and I do think it is supported um, with the supply demand picture in place outside of the new announced Iranian sanctions that are going in. This first slide that we'll look at is the crude oil inventories, and there isn't much that stands out here as we look at this. The red line is 2018 inventories, and you can see we're at levels quite a bit higher than what we had seen earlier in the decade, but we are at a lower level than what we've seen the previous 3 years when we pretty much had a glut of crude oil taking place. But the interesting note as we look at this slide is the previous 3 years, how we watch these inventories build through the first 4 or 5 months of each calendar year. And whereas 2018 here, we've been moving sideways. And the reason for this is the U.S. exports of crude oil. And we've really ramped up these exports. They have been averaging close to 2 million barrels a week in exports compared to a year ago, about 700,000 barrels a day. So rather than these inventories going into storage like we had seen the previous years, it is now being exported instead. If we look at the days of supply in crude oil, and I always like to look at the days of supply because it does factor in the current supply situation along with demand. And this is on a 4 week average. Um, so it does take out some quirks that we do see time to time in the weekly EIA inventories. So as we look at this 4 week average rather than the weeklies. And again, the red line is 2018 days supply. We're right in line what we've seen earlier in the decade again, so not a lot stands out there. We are quite a bit lower levels as we've seen the last 3 years, but again, we're experiencing some glut in crude oil at that time. Now, as we look at the diesel inventory, this shows a much different story than what the crude is showing. The red line again is 2018, and we're approaching levels at the lowest point that we'd seen for this time of year over the past decade. And the other thing I'd like to point out in this slide, the green line here is 2017, so last year's number, where we started at some really high levels. But throughout all of 2017, we just continued to draw these diesel inventories down. So as we came into 2018, our levels, of course, were quite a bit lower than where we started the year 2017. And since coming into the new calendar year, these drawdowns have just continued, and actually the pace of the drawdown over the last 2 or 3 months has actually picked up steam. And I think this paints an impressive fundamental picture here on the diesel story. And as we've watched diesel prices continue to climb, I think we need to see that continue to happen to choke off some of the demand. And if we continue to see drawdowns like we have here over the past couple years, we're going to have some serious supply situations coming into the fall months here. So, I don't want to hit the panic button yet on diesel supplies, but I think we need to be aware of what we've been experiencing over the last 18 months or so. And strong economy, strong demand, it does definitely set up a bullish scenario for the diesel prices here as we come into the fall time frame. Looking again at the days of supply of diesel fuel, and red line again 2018, we're at very low days of supply on hand. Again, that's with the low inventories and the high demand number. It's painting an impressive picture again for the overall supply demand fundamentals of the diesel um, market. I guess the one caution flag I would throw up with the bullish report that I am painting from a price scenario is the commitment of traders report and how long the managed money or the speculator funds are in this diesel market right now. This report is as of a week ago Tuesday, so it is a little bit dated. This report comes out each Friday for the previous Tuesday, so we will see another report on Friday of this week, which will be as of Tuesday. And I would expect to see the open interest climb again because of the price activity we've seen. I'm sure the speculators were in here buying this market. Um, but as of a week ago, the speculators were long 70,000 contracts of diesel. And once they get in these long positions, there is a point where they will look to take some profits in these positions and start to liquidate. And as they come in, sell the market, it can push prices down in a hurry. But that's not saying that's going to happen anytime in the near future. I just want to put this out there, make everybody aware of where these funds are and how rapidly they can move the market. But my guess is they have gotten themselves in this long position because of the fundamental story that I just painted, and they were seeing this as well and felt it's a good time to get long this diesel market. So if you would like to talk about any activities for fall needs or the market in general, always feel free to contact us. We'd love to visit with you. Thank you.